ready for a dramatic shift in the stock market as the Fed cuts rates, sending three ugly duckling stocks soaring into beautiful swans. Best Buy, Stanley Black & Decker, and Home Depot are poised to make a stunning comeback, driven by a perfect storm of a rate cycle, a housing market on the rise, and a surge in demand for AI-powered PCs and home improvement products. But which stocks will thrive in this new landscape and which will struggle to keep up? We're about to find out. Finally, as we dive into the world of finance, it's essential to understand the rate cycle and its impact on the stock market. The rate cycle, also known as the interest rate cycle, refers to the fluctuations in interest rates set by central banks, such as the Federal Reserve in the United States. These fluctuations have a significant impact on the economy and the stock market, making it crucial for investors to understand the rate cycle and its phases. The rate cycle typically goes through three phases: expansion, contraction, and neutral. During the expansion phase, interest rates are low and the economy is growing. This is often accompanied by a rise in stock prices as investors seek to take advantage of the low interest rates and invest in the stock market. Contrast, during the contraction phase, interest rates are high and the economy is slowing down. This is often accompanied by a decline in stock prices as investors become more cautious and seek to reduce their exposure to risk. As an investor, it's essential to understand the rate cycle and its impact on the stock market. By doing so, you can make informed decisions about when to invest and when to hold back. For example, during the expansion phase, you may want to consider investing in stocks that are likely to benefit from the low interest rates, such as those in the technology or consumer discretionary sectors. On the other hand, during the contraction phase, you may want to consider investing in stocks that are less sensitive to interest rates, such as those in the utilities or consumer staple sectors. Now let's take a closer look at Best Buy, a company that I believe has the potential to benefit from the rate cycle. Best Buy is a leading retailer of consumer electronics, and its stock has been performing well in recent years. One of the reasons for this is the company's focus on AI-powered PCs, which are in high demand due to the growing need for technology in the home. Additionally, Best Buy's management team has been doing a great job of adapting to changing consumer trends, such as the shift towards online shopping.
As an investor, I believe that Best Buy's stock has the potential to continue to perform well, especially during the expansion phase of the rate cycle.
The company's focus on AI-powered PCs, combined with its strong management team and adaptability to changing consumer trends, make it an attractive investment opportunity. However, it's essential to keep in mind that the rate cycle can be unpredictable and interest rates can fluctuate rapidly. But as such, it's crucial to stay informed and adjust your investment strategy accordingly. Another company that I believe has the potential to benefit from the rate cycle is Stanley Black & Decker. Stanley Black & Decker is a leading manufacturer of tools and other products, and its stock has been performing well in recent years. One of the reasons for this is the company's focus on the home improvement market, which is growing rapidly due to the increasing demand for DIY projects and home renovations. But additionally, Stanley Black & Decker's wide range of products and operations in over 60 countries make it a diversified company with a strong potential for growth. Now, as an investor, I believe that Stanley Black & Decker stock has the potential to continue to perform well, especially during the expansion phase of the rate cycle. The company's focus on the home improvement market, combined with its diversified product line and global operations, make it an attractive investment opportunity. But however, it's essential to keep in mind that the rate cycle can be unpredictable and interest rates can fluctuate rapidly. As such, it's crucial to stay informed and adjust your investment strategy accordingly. But Home Depot is another company that I believe has the potential to benefit from the rate cycle. Home Depot is a leading retailer of home improvement products, and the stock has been performing in recent years. One of the reasons for this is the company's focus on the home improvement market, which is growing rapidly due to the increasing demand for DIY projects and home renovations. Additionally, Home Depot's professional customer base and strong management team make it a well-positioned company to take advantage of the growing demand for home improvement products. But as an investor, I believe that Home Depot stock has the potential to continue to perform well, especially during the expansion phase of the rate cycle. The company's focus on the home improvement market, combined with its professional customer base and strong management team, make it an attractive investment opportunity. However, it's essential to keep in mind that the rate cycle can be unpredictable and interest rates can fluctuate rapidly. But as such, it's crucial to stay informed and adjust your investment strategy accordingly. Now let's take a closer look at the tech sector, which has been performing well in recent years. The tech sector includes companies such as NVIDIA, Alphabet, and Apple, which have been leaders in the development of artificial intelligence, quantum computing, and other emerging technologies. But as an investor, I believe that the tech sector has the potential to continue to perform well, especially during the expansion phase of the rate cycle. However, it's essential to keep in mind that the tech sector can be unpredictable, and interest rates can fluctuate rapidly. Clearly, as such, it's crucial to stay informed and adjust your investment strategy accordingly. For example, during the contraction phase of the rate cycle, you may want to consider investing in stocks that are less sensitive to interest rates, such as those in the utilities or consumer staples sectors. In conclusion, the rate cycle and its impact on the stock market are complex and multifaceted. This setting, as an investor, it's essential to stay informed and adjust your investment strategy accordingly. By understanding your rate cycle and its phases, you can make informed decisions about when to invest and when to hold back. Additionally, by focusing on companies that are well positioned to take advantage of the growing demand for home improvement products and emerging technologies, you can increase your chances of success in the stock market. As I always say, investing in the stock market is a long-term game, and it's essential to be patient in disciplining your approach. By staying informed and adjusting your investment strategy accordingly, you can increase your chances of success and achieve your financial goals. As we conclude our discussion on the rate cycle and its impact on the stock market, I'd like to suggest some investing strategies that you can consider based on the insights that we've gained from this story. Firstly, consider investing in companies that are well positioned to take advantage of the growing demand for home improvement products and emerging technologies. Companies like Best Buy, Stanley Black & Decker, and Home Depot are great examples of this. Secondly, consider diversifying your portfolio by investing in a mix of stocks from different sectors, including technology, consumer discretionary, and consumer staples. This can help you reduce your risk and increase your potential returns. Thirdly, consider investing in companies that have a strong track record of innovation and adaptability. Companies like NVIDIA and Alphabet are great examples of this. Finally, consider keeping a close eye on interest rates and adjusting your investment strategy accordingly. During the expansion phase of the rate cycle, you may want to consider investing in stocks that are likely to benefit from the low interest rates. During the contraction phase, you may want to consider investing in stocks that are less sensitive to interest rates. By following these investing strategies, you can increase your chances of success in the stock market and achieve your financial goal. Thank you for joining me on this episode of NewsPod AI from Big Blue Ceiling. But I hope you found this discussion informative and helpful. If you have any questions or comments, please don't hesitate to reach out to us. Till next time, stay informed and stay ahead of the curve.